Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address is r@fxcm.com, and today is it's Wednesday, the 16th, 2022. Just bringing up a high-risk investment warning. I'll keep this on screen for a few moments. All right, and here is the market commentary disclaimer, and here is the references: MarketScope, Cnbc, and perhaps TradingView. What I'll do is I'll stop the webinar at the top of the hour, and then we'll move on to the crypto minute. Just starting off with the CNBC morning news. European markets head for lukewarm open with Fed decision ahead. European stocks are expected to open slightly higher on Wednesday as global markets await the latest monetary policy figures and economic forecasts from the US Federal Reserve. Global markets are broadly positive ahead of the conclusion of the Federal Reserve's two-day meeting on Wednesday, where the central bank is widely expected to raise rates by 1/4 of a point, the first hike since 2018. Watchers are also expecting the central bank to offer a new quarterly forecast that could indicate 5 or 6 more hikes this year. The Fed is expected to announce an interest rate decision and economic projection at 2 p.m. Eastern Time on Wednesday, which will be followed by a briefing from Federal Reserve Chair Jerome Powell. US stock futures were flat in overnight trading ahead of the meeting's outcome, while shares in Asia Pacific were mostly higher in Wednesday's trade. The markets in mainland China were mixed amid the COVID resurgence in the country. Russia's invasion of Ukraine continues to dominate global attention. The Russian state is due to pay $117 million in interest on 2 sovereign euro bonds on Wednesday, the first of four payment dates to creditors in March alone, as the country faces the prospect of defaulting on its debt. I was just investigating that a little further. So it looks as if they're going to pay in rubles, and the question was if that's going to constitute a default. It turns out that it doesn't necessarily constitute a default, but it's going to take some time before the market actually confirms this is a default or not. So there might be a little bit of noise about this today, but we won't know the outcome just yet. That comes after international sanctions in Russia's central bank have blocked off a substantial portion of the country's foreign exchange reserves following Russia's invasion of Ukraine. Earnings in Europe come from Inditex, E.ON, and BMW on Wednesday, and the IEA releases its latest oil market report. Yeah, and Howard saying billions of rubles. Yeah, exactly. Morning, Howard, and morning to everyone. Thank you for everyone that's signed in. Just taking a look firstly at the gold market. This is the weekly, and you can see that this looks like some sort of squeeze. There's been a scramble to get out of gold. We're only in the middle of the week, and you can see how heavy this sell down is over here. So some sort of squeeze certainly taking place. So 2000 is clearly a key level psychologically, as well as now we can say there's a price resistance point there. So I'll just put this resistance in over here, and the fact that gold is coming down, I think again just suggests perhaps the decline in the possibility of the potential for stagflation. Not to say that it's not there, The potential certainly is still there. I think the odds of a stagflation environment are lengthening, so I think we're getting longer odds there. All right, so that's why we've got the gold market, I think, coming down. Also, money rotating out of the havens, starting to look now for bargains on the risk market, which we'll take a look at. Hey, Anna, good morning to you. Nice to have you on the webinar as always. So you can see that we've got this big sell down. Let's just take a look at oil. Let's take a look at Brent first. Sorry, I was looking at this chart and I was thinking, wait, that doesn't make sense. That's because I've got the wrong chart up. Let's just go through to UK oil. All right, so this is not quite as vicious as gold, so to speak. There certainly has been a huge sell-off here. We reached $133 per barrel. You can see we're trading at 102. So the these candles over here are just absolutely incredible in terms of the previous price action. Let's just try and get an idea of the sentiment around this. So first, what we'll do is we'll combine the second last candle and the third last candle, and we're going to combine the last two candles just to get an idea of sentiment. So if we take the long blue candle, we've got this, the low over here, we're combining it with this. So here's the actual range. So we've got just over this last 2 weeks, a range that's just, I mean, it's shooting up $40. Now that's a range of, we've got an open round about there. The close is over here, right? Okay, so that's what we get when we combine. Just to make it into a candle, it would be an open candle, so open, close. But you can see a big selling tail, So clearly, you know, $133 is a challenge. It's not to say that we can't get there. It depends on the supply side economics. Do we still have that supply shock? But there is resistance here. However, the combination of the two candles, for the last 2 weeks poses a puzzle as well. So the range is similar. Okay, perhaps we can push this up slightly like that. Okay, push this up slightly like that. And now the question is, what does this candle look like? So we're going to take the open. So the open would be over there. Okay, and then we'll take a look where the close is, which is round about here. And we get this type of a candle. Except that it's a red candle. Except that it's a red candle. So still got that this resistance point, which is making sense because we're using the same candle over here. It just looks as if gold has a little bit more uncertainty to it than, say, the gold market. You can see that there is also a little bit of support coming in for oil here, the energy market. So we'll just keep an eye on that. But certainly the 133, that was a big movement up. Take a look at how the RSI would have kept us out of trouble. See how the RSI kept us out of trouble there? whilst the whole sort of market was clamoring to get into energy, we were saying, hang on a second, guys, the risk profile here is skewed. We've got a skewed risk profile. So it's nice to see sort of the safety net working there. So we've got oil coming down, a little bit of ambiguity coming into the oil market. We've got gold coming down quite strongly. Money moving out of the haven. Where's it going? Let's just take a look at the DAX, see what's happening here. All right, so money looks to be coming back into the risk markets. Okay, it looks to be coming back into the risk markets. In other words, there is a search for bargains at the moment. You can see that we've got three conditions that we need to have a reference candle reversal. So we've got the condition 1 here, which is the lowest low in at least 3 candles. We've got condition 2, price taking out the reference candle's high. We'll only know on Friday if we get condition 3, which would be a close above last week's high. So there could be good value in the market right now. I want everyone to sort of not get carried away with that, because what we've mentioned before is it's the bear market, rallies that trap us. So I would think there is value in the market right now. I'm a little nervous just not to get trapped on the wrong side of the market. Let's just keep an eye on how we track for the rest of the week, and a big positive would be if we can get into the upper 80 and hold, because that means that the momentum is remaining positive. It means that the momentum is remaining on the bullish side. So there is certainly some bargain hunting that's going on. Does it mean that we are out of the sort of the woods, so to speak? Absolutely not. Yeah, absolutely not. It could be, as Anna says, the suckers, right? We could be getting sucked into the suckers rally. We want to be careful. So we want to be buying value. We don't want to be getting up. So just to confirm what we're looking at here, we're looking at the haven. So if gold continues to come down, I think that means that money is rotating back into risk. Okay, we want to see oil come down. So we'll just look at US oil here, because that would be suggesting that stagflation is becoming less of an issue. Now, you know, this is a very short-term conclusion. We're basing this on the current price action this week. It's not really enough to go on. There's still geopolitics. There's still huge potential for these supply side disruptions. So of course we want to be very, very cognizant of that. However, okay, let's just go back to the DAX. What we have seen on the daily side is that it's moved from the weak area and it's gone into the neutral area. That is a positive movement. If it gets into the bullish area, that would be even better. Now, one of the ways you can monitor if we are sort of heading into a trap is to look at our reference candles. Okay, it's becoming hugely important now to try and get an idea of the underlying, the true sentiment. So you can see that we certainly have a candle here that's got condition 1. So this is yesterday's candle. You can see that right now a price is above yesterday's high, and if it closes above yesterday's high, okay, that's bullish. But we have to monitor this on a day-by-day basis, because what happens if tomorrow we get a bearish reference? Okay, in other words, we're starting to see the bear market rally starting to unfold. So we're going to be, there's a huge potential for a trap here. Huge. Yeah. So Peter's saying beware the trap. So he says beware the short trap. And there certainly could be a short trap there, but I would suggest there could be a long trap as well. We stood in this uncertain environment. I don't know which way we're going to go, Pete, but so at the moment it does look as if there is bargain hunting going on. We're going to have to monitor this every day, okay, just to see that the momentum, that the strength continues upwards. As soon as we get that bearish reference candle reversal, then we've got to be quick on our feet, because it could be the proverbial suckers rally. So let's just keep an eye on that. We've just hit the top of the hour, so I'm going to conclude the webinar at this point. But I'm going to go on to our crypto minute, and of course extend the invitation to everyone to join. So I'm going to end. And then look forward to seeing you in the next webinar. Thanks, guys.